following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good news, bad news. The good news is I was going to bring the secret to the 10:10 watch time tomorrow. The bad news is the old doctors here in Philadelphia want to check the old cowboy out. So I've got to do a doctor's appointment tomorrow, and it's just normal, nothing serious. But we will do the secret to the watch time on Monday, and I think you're going to be really surprised. I certainly was. Folks, let me ask you a question. You know, most of us here, especially the boys, yeah, the old cowboy is okay. It's, when you were kids, remember, you used to read the story about Tom Sawyer and Huck Finn and stuff like this, and the river pirates along the Mississippi. Where's the greatest place to hide something, folks, if you want to hide something? Where's the best place to hide? Come on, let's get this going here. Let's have a few little, no, it's not under the bed, Duffy. No, it's not out in the backyard, Mr. Z. Gator. Mr. Gator is right, and so is JB. You hide it in plain sight, and that's the best place to hide it. And the best example of that happens to be the Great Pyramid at Giza. That's part of what that thing is. Now, when you see shows like this, I'm going to get off this is what, hey, this is the show I got to do, so I got to keep it interesting. If you see a show, and believe me, there are hundreds and hundreds of shows about the Great Pyramid of Giza. There's wonderful shows on the mathematics of the universe. All of that is really great. But to find someone that will hire a cryptographer to prove that what that person said on that tape, that all of them line up on a geometric plane covering the exact meridian of the Earth, to find someone to do that. Now that is a little bit different, and it's really amazing how all of these ancient things from Easter Island all the way to Giza are all. I'm sorry. Family joke. We need a judge's ruling on this. We have a comedian. Bill Cosby has entered the room, folks. He's under the guise of Mark P in here. So he likes triangles. Gee, that's really good. Triangles are good, and so are circles. Circles can be nice. Anyway, it's going to be interesting because this thing about the watch, you see it, you don't believe it, and then when things are happening, it's really amazing. But we're going to do it Monday because I know some people will miss it, and then they will believe you. They will believe you more if they see it, and whether it proves out right or not, I don't know. No, I wasn't given anything medicinal in Kiev. And but anyway, I want to try to keep us. Folks, it's really hard to do a radio show every day. You can ask John and Basil and everybody else. Steve, you got to try to make it interesting, and that's the whole secret. Otherwise, we have no viewers at all. So we'll see. All right, let's take a look here at the first thing we want to watch. We've got a major pattern completing here in sugar, going back over the last 9 months. You can see we had a 3-drive to a bottom pattern down there in August. Perfect ABCD. We had a 20-man line pull back at a 382, and now we're completing 3 ABCDs up here at this $18 a pound in sugar. And remember, the all-time high in sugar was $66 a pound back in 1966. So we'll see what happens here with the sugar over the next few days. But we should make it. I don't know if it's made new highs yet today or not, but we certainly should get up to about the 18 level in the sugar. And I don't trade sugar, I don't trade coffee, and I don't trade cocoa. But someone asked a question about the sugar, and I tried to put it in here, to let you see if it's right. Okay, that's true. That was high fructose corn sugar back in the 60s. That's correct, and that's just the way it goes. So what are you going to do? You can't do anything more than that. Okay, we're going to have had a request to look at crude oil, which we will certainly do. I believe the oil is making some type of a major top up into this area right here. We've seen this before. I'm going to put the first one in. We did this on Tuesday when I got back, and you'll see this is the heating oil. That's one of the components when you get rid of when you crack the oil into its products. The next one that we have, if I have them all, is the oil itself, I believe, and that is this one. Nope, that's not that one. Just give me 1 second. I'm not as quick as I once was, but I am quick at least once. There we go. Now we got the crude oil up, and we'll see that we have a lot of Fibonacci stuff coming in here around this $50 a barrel level. Now this meeting in Austria, they never make up their mind. I mean, they've been fighting for 3,000 years. How are they going to make up their mind over a weekend? Duh. You don't have to be a rocket scientist to figure that out. They couldn't agree on what day of the week it is. So that's pretty much what you're looking at. I've just been told that there's a big sell-off now in crude oil, and I'm not sure what's going on with that, but let's take a look here. Wow, you're right. It's down 30 cents from the last time I looked at it. Holy cow, they might stop trading in it. A big sell-off in crude oil would be about $3 a barrel from this level, would be my guess, but we'll have to wait and see. Okay, now we want to get to the moment of hand. We have some real serious support that has just been breached in the S&P. I want to show you this because this is what happened yesterday. We had this, perfect ABC down here on June 1st. That was the first correction after we had that big rally back, and I wanted to show you what happened here. We had a really nice run up. We ran up about 17 handles, and then we pulled back to a perfect 382 retracement. Then we rallied up, but we did not take out the 786 line. We should have done that, and we certainly didn't do that. And what's happened now is we're now down below that 382 line, and that shouldn't have happened if the market was really bullish. So that tells us we've got some selling coming in. I know everyone's going to say, well, this is because crude oil is selling off. Folks, 30 cents or 40 cents or 50 cents in crude oil is like separating fly poop and pepper. They look exactly the same on a white piece of paper, so you can't tell me that there's anything going on between those. But we'll watch it anyway to see what happens, and we'll move to that point and not worry too much about it. The big problem that we have, of course, in the stock market is the fact that we've had this incredible quantitative easing. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, I stand corrected, folks. We're actually down $1.50 from our high overnight in the oil. So it is bigger than I thought. I happen to be looking at the 4.8 side of it, and I had it mixed up with the British pound, and anyway, that neither here nor there, but has had a pretty good move. We are at the 786 retracement of the last low down here at this 48 level. Below that, it sets up a big ABCD down at John Logan's price at around 46. That would be a perfect ABCD pattern from our high at 50 and change down to 47.70 up to 49.50, and that would take us spot on down to around 46. I believe the exact price will be 47 spot on. Exactly 47. So that should be some good support, but that should be heading there because it is a really nice ABCD going over the last 5 days. And as we know, those ABCD patterns, they don't work all the time, but they work often enough that you can go to the bank with them occasionally and cash a few denarii or whatever your currency happens to be. Since we're speaking about ABCDs, we need to take a look here at the S&P because it's still in a bullish mode. We've had lower tops, of course, since May 27th. And we are setting up another Gartley pattern here from the high that we made yesterday up at 2099. We came down, we rallied up to a perfect 78% retracement at 2097 last night, and now we're heading down to the ABCD structure of that, and that will take us to the 2089 level, which is not very far away because it's only, let me see, 1, 2, 3, only 3 points away. Well, yeah, three points away. Around 2088.50 is where we want to look at that. Below 2085, we're looking at a more serious correction. That would take us all the way down to 2075. But the 2089, 2088 area should hold up today, I believe, because we have this structure of higher bottoms and very shallow corrections, and it still looks bullish. But it's got to get moving, because if it doesn't start making new highs pretty soon, it's going to be a big distribution up here, and then we'll be getting ready to go lower. One of the things I mentioned to you folks is that I saw some dates that are coming due when I was in London, and of course there's a big one on the bread exit day, which is the 23rd, but the biggest day of the year from a mathematical and geometric point of view will be June 28th. I have to double check that with my good friend Norm Winsky, and we'll have him on the show, I believe, next on the 7th, which is next Wednesday. Norm will be on our show, and we'll take a look at that. We're also going to have Bill Meridian from Austria. I would have had him on this week, but Bill has a lot of friends from the Saudi Arabia area, and he is being wined and dined by those big heads of state over there, because he's worked with those folks for 12 years when he lived in Abu Dhabi. So he's really busy this week, but we'll try to get him on next week. I'm pretty sure we'll be able to get him. Also, as a guest, we're going to have Grace Morris from Astro Economics. She's a veteran astrology, and she's a pure astrologer. She does her picks on the wheels of the birth charts, the transit charts of the stocks, and she does a really good job. She has a very good record. She's well liked by everybody in the business, and of course she's out of the Chicago area. But we're going to have her on either next week or the week after, as we will have our friend Rich Anderson on to talk to us about the grains, because we got a lot of things happening in the grains, folks. We've got this monster ABCD pattern forming in the corn. And I think that's going to be an interesting one to see if we do that, because we're so contracyclical that it's really amazing. If you remember last year at this time, we were making a major bottom we have those double Gartley patterns in the beans and the wheat and the corn, and then we had a $1.50 rally. This year, we're making a high. So I think it's very important that we watch this. What's interesting about the corn move, and unfortunately, you know what? I do have it. Stop the front door, shut the front door, and raise the rent if I can only find where I put it. Come on. Oh, dear. Here it is. I think it's where it is. Yeah, if you'll take a look at this, let me just put this up here and we'll take a look at it here. We have a perfect ABCD structure in the corn here, and we're going to look at it right here. But don't worry about that ABCD pattern. Go to the left of the chart. You'll see where the big move happened from, this is the beginning of it in June, but it started on Memorial Day. And the market, you saw, went straight up. Well, we're doing exactly the same dollar amount that we did last year that we have going right now. In other words, that ABC that you see there, that's the exact distance that we made last year at roughly the same time, only it's inverted this year. And if you'll notice those little triangles on the bottom, those are directly out of the pyramid of Khufu. They were shipped to me from the director of the Cairo Museum last night by special delivery, so I could put these on the corn chart so that you could see the replicas of what's happening in the pyramids with the corn. And if you believe that, I still have 2 shares of the Brooklyn Bridge. It just shows time and price being equal. That's pretty much, what we're looking at here. So let's watch that as we go through looking at some of these. One of the questions that someone has brought to my attention here is the silver, and we wanted to bring it up again because we are staying at this level in silver for such a long time that it has to mean something. I just think that we could make it, another week or two where we don't, totally collapse in silver and, break down below 1540, which we certainly could. But, we've been down as low. This chart is 2 days old because I haven't been able to put it up quickly enough. But we did get as low as 1570. So we did shatter the 61% retracement. We're still trading at around that, near that $16 per ounce level. But I believe that longer ABCD pattern that was here would tell us that we're most probably going to come down a little bit lower based on, gold has not rallied very much off of its attempt at $1,200, holding at $1,200. So I would suggest, we're waiting a little bit. The price that we've been waiting all along in gold, it is 1190. But when you look at the charts after we made the 1306 in gold, that price would be closer to 1150. That's where the 20-minute line would come in, and that's where the 61% retracement. Yes, I saw that Larry Williams was on Bloomberg early in the morning, and it's always nice to see him on. He's a real class act, folks. If you ever get a chance to watch him, he is very, very good, and boy, he certainly knows his stuff. I don't know if you folks know this or not, but his daughter is Michelle Williams. She's been up for 2 Academy Awards and probably be another one very soon. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, remember, in the land of the one-eyed man, The land of the blind, the one-eyed man is king. I wanted to mention to you something really strange. You think about funny things that happen in your life. The license plates on the kid's car here in Philadelphia is JXX4396. That's Twentyman's phone number. I saw that. I totally cracked up. All right, I'm going to give you a hint about the watch. I'm going to put it up here, and we're going to discuss it on Monday. I'll be gone Friday, but you'll see here. Let's get it over here. I think this will do it. I'll be able to get in. As you can see here, it's related to Masonic stuff that goes back a very, very long time, and we'll do some of these things. But you'll see how this thing is very, very unusual. It's another one of those things of hiding in plain sight. Let's double check here to see what we're doing in the markets early this morning, and see how we're doing with these areas that we want to be watching. Yesterday we came really close to the bottom, the exact bottom in the S&P. We missed that about a half a point, but keep an eye on this level here at the 2089. That should be that should hold support, and failure of that really sets this thing up to come down around 1077. And that's the larger, ABCD. As far as the upside, if we break out above 2100, this thing could it could go up and make a new high at 2134. It certainly could. And that's all I can say about that, neither here nor there. And we'll move on to the next one. As far as the currencies, we have a lot of resistance in the euro up here at the 112.20. That was the 786 of the last high. There was also an ABCD there coming in at that point. The gold market, we've talked a little bit about silver, but I also wanted to mention the gold. The gold is set up really nicely here. If you'll notice, this is what's happened, as through the night last night, and you'll see that gold has had only been able to rally $22 off the bottom in 4 days. That's not a very good sign. And silver's actually made lower lows than we had back on May 30th. So that's not a good sign either. So that cycle has certainly not bottomed as of yet. So we want to watch that very closely, because I still think the gold and silver have a chance, for a longer term bull. But we did come back way beyond the 382 retracement in the silver, and then also in the gold. So that slows it down a little bit. And one of the reasons why it slows down in the gold, I got to show you this long-term chart, that goes back, quite a few years. In fact, it goes back about 7 years from our good friend Jim Bartolioni. I want to show you this because this is the gold silver index going back on a weekly chart a very long way. And we like symmetry and things that repeat over and over. And you'll notice that during the correction that we had during 2012 to 2013, that's exactly what happened here in the XAU just recently. In fact, we were mentioning that because of the ABCD that we had in gold at that 1303 level. We had 3 ABCD patterns completing at that time. And of course, the whole world wanted to buy gold, and now we're $80 lower. And we'll be looking for a place to get long. But there is a potential here that this is nothing more than a bear market rally, folks. And we could be, getting ready to make, new lows in gold, and maybe head even below the magical, $1,000 an ounce level. I don't see that as of yet, but the fact that this chart did exactly what it was supposed to do, if it repeated what happened during the year rally that we had during 2012, 2013, then we have to certainly, respect that, and then we'll see what's going on. Mr. Z's asked a question about the Dees corn, either stopping here at the 420 level or going on to extend. The answer to that is going to be in the sky, and I'm not talking about astrology. I'm talking about the weather. Because that's the main thing. They're having a really big move on the July beans. They're moving, more, much stronger than in November. That July bean spread, when that usually means that there's pretty good demand out there, and that's pretty much what's happened. We had a beautiful Gartley in soybean oil last week, but it's only been able to rally a very, very marginal amount. And we'll have Rich Anderson on next week to discuss some of these things. But we're started the weather market early. That's basically, what happened last year. But if you remember last year, that the corn and beans both topped right before the July 4th weekend. It was supposed to be terrible crops, and then all of a sudden, boom, we had the biggest crops we've ever had, and they've gone into, newer levels of lower lows. By the way, one of our dinners in here mentioned the fact that Larry Williams' son, he's got 6 kids. 2 of them are doctors. He has a surgeon in Shanghai. He's a general surgeon in Shanghai. And then he has a son that's a psychiatrist. And he's written a book called The Mental Edge in Trading. And if you want a good book on the mental part of trading, Jason Williams has certainly wrote that book. I'm sure you can get it on Amazon, but it's very, very good material. So keep an eye on that one if you need a little help on the mental side of it, which, of course, we all do. Okay, now we want to go on to the next thing, and that is the lost my train of thought. Oil services. This is another one that looks interesting. I'm going to be showing you some things. Let's just get this up here so we can look at it first. Get the oil services chart going. Mr. Z, I don't have a chance to look at prices while I'm doing this. How much are July beans up? Are they up more than 20 cents? 18. You're reading my mind. Shut the front door and raise the rent. That's a good sign. Okay, that's good. Now, have November taken out the high at 1080? Have they taken out the high at 1080? Because I want to see how they act there. Okay, they haven't taken that high out at 1080. And one other question, the last on Christmas corn, if you don't mind, and then I'll get on to looking at this, and we'll see what we have going on with the other things. The problem is working off the laptop is you don't have multiple monitors where you can switch over and look at all the stuff, because it's a little more difficult to catch everything. This chart that we're looking at right now, I think I'm looking at it right now. Let's pull it up and make sure we have it. This is the chart of the oil services index as it relates to crude oil's continuous contract. Going back over a year or so, and you'll notice that the crude oil has rallied far, far more than the oil services company. They're under a great deal of pressure. This could be due to the fact that they have this tremendous overlying debt of junk bonds that could be just keeping them down. We don't know that, but you see the correlation between crude oil and the OSX versus the NYA is certainly very, very strong, and this divergence must mean a great deal. It could mean that we're looking at some, real serious divergence, because if you go back to see where we were at $60 a barrel, you'll notice that divergence was also apparent. So there's another reason to possibly be short crude.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're going to be watching these markets here this morning to see if we hold up into this support that we're looking at. And right now, the S&P is trading at 2093. Keep an eye at that 2089 area, folks. That's the 61% retracement of the move all day yesterday, and it's also a perfect ABCD level. And we did get up to the 786 at 2097 last night. And if we get above that, then the bets are off, and we still have a really strong bias. But that bottom that we had back on the 19th of May, you just circle that puppy, because if we go below that, it's sayonara, and that in Spanish means goodbye. And going below 20 is sayonara in any language. All right, let's take a look at the crude oil. We basically held the 786 at that $48 a barrel level. We're going to have an oil report out here in 17 minutes. And of course, that's like having a jobs report. And it's always, very, very wild and not a whole lot of fun to see it. I have a question from someone that I'm looking at the corn at possibly, 418 as a sell, and we've only been to 417, if that's close enough. I wish I had the answer to that. I don't really know, but if you stop and think that the strength that we're having in July soybeans versus the November and also the wheat lagging, I would be tempted to say that, there's not a lot of sympathetic buying coming into corn. We're looking at July beans, so that's a different. Now, July beans are going to be, they're not the spot month anymore. August is the spot, and so that would mean that you got commercial players against themselves, and boy, when that happens, anything can happen. And I remember a situation when I was trading at Conti Commodities back in 1972 during the Russian grain robbery. Corn was going crazy, and I happened to be in July corn into delivery, and they wanted me to get out of it, and I wanted to be out of it. It was a mistake that I had an extra corn on, and it went crazy because DeKalb grain was heavily short corn, and they couldn't get any of it, and the other corn people were squeezing them, and it moved $1.50 a bushel, which was $7,500, and that was a huge amount in one day. But anyway, that was surpassed many years later by a $4 move in spot corn. So you don't want to be in spot corn. Oh, we got a caller. Heavens forbid. Ron from St. Petersburg, Florida. What can I help you with, my friend?
Hey, Larry, how are you?
I am very good.
Love your show.
Thank you so much. I appreciate it. I'll send you that $20 as soon as I collect it from the racetrack on Saturday, okay?
Okay.
I wish. Go ahead.
We're looking at maybe the market taking a dive, and if it does, is that going to drag everything down, including the commodities and gold? And I'm in wheat and the soft commodities.
Mm-hmm. Well, it could, but what's your definition of a dive, Ron? I mean, you're looking at a 20% hit or 40% hit, and over what period of time?
Let's just say for the short term, maybe the next month or two.
Okay, the next month or two, we could certainly. We're always susceptible to a 10% and possibly even 20% drop during that time, but I don't see anything bigger than that. On the horizon right now. And, we've been in this bull market since March the 5th of 2009. But your question is related to the commodities, which have been the weakest. And, we've had good rallies now and in silver and gold that have sold off quite a bit. But copper sold off a lot. Iron ore sold off a lot. And so this thing in commodities might possibly be over. We'll just have to, let us tell us what it's doing. But one thing I recommend you do, Ron, and because these markets are so vicious these days, is make sure you look at what your risk is going to be. You got to have an uncle point that says, I can't take it anymore. And because there's always another bus coming by where you can put a quarter in it, and get a new forecast. But if you don't protect your capital, you don't have a chance to take the next side. And make sure you do that, and don't be overly committed in any one thing.
So it kind of makes you wonder where to put your stop. How far away do you want to put your stop, and how much pain can you take?
Well,
to the strength of the drop, right?
That's correct. If you get a really, some people can trade without stops, and I respect them for doing that, but I'm not one of them. I have to, because of, my emotional makeup, I have to get out of the market and then look at it again. And I'd rather, the old adage is it's much better to be out of a market wishing you were in than in a market wishing you were out. So, if you're talking about wheat, if we get wheat below 455, I can see absolutely no reason for anybody, being wrong that, you know what I mean?
Yeah. That's good. Appreciate it.
It's my pleasure. You live in a beautiful part of the state there, St. Petersburg. It's a really beautiful spot.
Well, I love it here. Great.
I'm sure you do. It's a really nice spot. Okay, thanks for calling in, Ron. I really appreciate it.
All right, thanks. We'll talk to you.
You bet. Okay, that's some good advice, folks, is to always, protect yourself, because if you don't protect yourself, nobody else is going to. That's the main thing that you really have to remember, that if you don't do that, you're in big trouble. Because if you don't use a stop, you are telling the market that I know more than you do, and that is not the case. So let's watch it very closely. We're only a point or so away now from our S&P price. It's acting very normally here this morning, so we'll see. Actually, 2 points away, but we're getting closer. But it really needs to hold. If it fails at the 1085 level, see, we just hit our price. There you go. Everybody's looking at it. We just made it. And but if we get below the 2085 level, that's telling us that we're heading down to the 2070 85 level, because that's the bigger ABCD pattern that's there. That's the one that goes from 2103 down to the low that we had yesterday at 2083, and then we move up, to the 786. That measures to the 2075 level. Below 2075, look out 2020, here I come, because it could easily go below that. Folks, if we break below that low, that's the equivalent of breaking the low from August the 15th of 2007. We made a low on August the 15th, 2007. That's the day the Dow was down 350 points. The NASDAQ and the IWM, the small caps, were up on the day. We rallied into October the 7th, into that new moon. and then we dropped 70%. So that 2020 on the S&P is just absolutely incredibly important. So make sure you keep a close eye on this. And now I have lost data, which is always a lot of fun. I have no idea where things are, so we'll just have to wait and see.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and market's trading right at the 61% of yesterday's low, 28, but the low so far has been 20.86 and a quarter. My assumption is we are going down to the 20.75 level if we break below 20.85. So it's about a 3-point difference between those two. The fact that we came down here really quickly this morning is no big deal, because this is when the crazies are out there trading in that first half hour. They seem to want to get in the market either long or short at any particular time. By the way, I would like to tell you that we did some live trading at several places across the globe, and the supreme leader of that was my good friend Tom Hugard. I mean, He trades. He's young and he's aggressive. Well, he's 47. That's still young, but his aggressive trading is really something to behold. He's only right about 20% of the time, but he makes returns that are just absolutely astounding. He took a $2,000 account and made $1,000 a week for 16 straight weeks. Just trading really strong moves. In other words, he would buy higher highs and he sells lower lows. He only sells strength. He only buys weakness. And of course, he gets stopped out a lot. He's only right about 20% of the time, but he's just does a fabulous job at managing it that way. So it was really something, to see someone that actually walks the talk as far as those kind of returns, which those are, Superman type stuff. And whether they're doable for a very long period of time, who knows? Because if he did, he would be the richest man in Babylon. We've got a big move happening in Treasury bonds right now, folks. We've taken out, we're almost ready to take out the highs of yesterday. We've matched them so far. And if we get up to that level, watch the 164.27 level in the bonds. That's going to be a really key level. I'm in September bonds now. September bonds, we've rolled those over because of the expiration coming into June. So live every day in an attitude. I'll see you all on Monday, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.